Bharath Uppiliappan, the CEO at Dr Lal Path Labs. Bharath, hi, good morning. Thank you so much for speaking with us. First up, there has been a bit of disappointment when it comes to your operational performance, and that has been led by the higher marketing and tech spends. Going forward, do you expect the pressure on margins to continue, or this was a one-quarter blip?
Good morning, and it is great to be back on your show today. I will kind of give you a brief drill down of our results so that you get a fuller perspective of how the numbers stack up. Last year, same quarter, you would remember the country was going through a very big wave of COVID wave 2 and the Delta wave. And this resulted us in clocking very high revenues, as that was the need of the hour to serve the country and the patients when this wave was at its peak. Now, when you remove and we did about 221 crores of revenue of COVID and allied tests last year, same quarter, which led to a large leverage on the bottom line. Now, this year, same quarter, the COVID contribution is less than 4% now. As the wave recedes, the testing has gone to minimal. The COVID volumes have gone away. The good news, however, is that our non-COVID volumes have registered a healthy growth and our overall revenues have come at 482 crores for the non-COVID side of the business. Now, this represents a 25% growth. We also saw a large increase in the test per patients led by our SwasthFit bundle test portfolio as well as our super specialty business. Given this context and the lack of, let us say, the way we have been driving the market for volumes, we feel very comfortable of our margin profiles and of the tech investments we have made to ensure that the top line continues to grow in a sustainable fashion.
Sure. What I want to specifically understand, Bharath, is also about the non-COVID business growth, because I'm guessing the COVID business would now be weaning off. Do you have enough visibility on volume growth in the non-COVID segment?
Yes, indeed. So the good news is that our non-COVID business has grown at about 25% for the quarter. And it is largely led by volume. There is a small impact of mix, but the volumes start to rebound back. And in fact, we registered the highest ever revenue of non-COVID of 482 crores in this quarter. And we expect to build on this as we go forward into the future as well. So if you look at our business, the way our SwasthFit bundle test portfolio has performed this quarter, the way our super specialty business has performed, the way we have taken to market a new area of diagnosis called the autoimmune area has given us a lot of good results and very encouraging results. So we feel confident that we'll continue to build on this growth momentum, which we are seeing currently on the non-COVID side of the business.
Right. When we just look at the overall business, can you just talk to us about pricing? Because the competition itself has been so high. Volumes, you said, will grow and, all of that is taken as a point. But what do you think about pricing? With so many players entering this business, you think realizations and pricing will only come down?
So there are 2-3 ways to look at our test mix portfolio. One is that, yes, competition has increased. There's a lot of noise, let us say, on competition on the ground, right? A lot of new companies have entered this field and everyone is, going around, let's say, 2-3 top 5 tests, if at all. Now, if you look at the whole menu we have about 4,500 tests. So top 5 tests are a reasonable large size of contribution, but not a very, very significant portion to overall revenue. We have the ability to play the full piano as well as the test menu is concerned for us to be able to play the mixed game. Number 2 is that India is a very large country which is underdiagnosed. If you look at our results for this quarter, RPP or realization per patient has moved up by give or take 2.5%. And this is because of the way we have managed the mix in the quarter. So there are more levers to manage pricing just than absolute price per test. The second thing I would like to say is if you look at the competitive intensity, people started off advertising very, very low prices. Looks like they're also moving up the price table because very low prices, are not sustainable or for that matter, credible. On the overall basis, I would like to say that we are ready for the competitive intensity and will continue to make all efforts, be it sales and marketing efforts, be it technology intervention efforts, be it running a lean operations to be able to serve their patients well while delivering returns for our shareholders.
So growth at any cost, Bharat? I'm asking a question usually that we ask the startup founders, because the fact is that this place is now also being occupied by the new age companies, whether, it's a Tata 1MG, you've got NetMeds and Reliance. Competition is intensifying. Flipkart has also signaled its entry. So for the legacy players like yourselves, growth at any cost, but then that'll impact your bottom line as well, because there is a price war on at the moment.
So, first of all, I would like to say is that, we have a very well diversified portfolio across tests, across geographies, across segments. So it is not as if, the price competition is across the entire spectrum of tests and geographies we have. In fact, if you look at it, it is only in, let us say, 3-4 tests in, let us say, Delhi, Bombay, Bangalore, kind of cities. A significant portion of our revenues comes from tier 2, 3, 4 cities, where even this competitive intensity has still not reached. Number two is that the overall play, as far as the test menu is concerned, we have a very wide portfolio. Our ability to manage the portfolio is going to be the key, and the way we segment the market and offer customized solution will help us kind of maintain the revenue profile and the margin profile. So while yes, the competitive intensity has gone up, but our results in this quarter demonstrates our ability to face this competition in a very sustainable fashion. To give you some numbers, a test per patient of 2.64 is the highest ever in a quarter where competitive intensity last quarter was the highest ever from a media perspective at least. We were on air and on press for about 6 to 8 weeks of the quarter, which is what helped us to get to the volume levels. So we will compete definitely, but not compete at any cost. We have an advantage in terms of the geographic spread, the channel spread, and the test menu spread. And that is what we will leverage.
Okay, Bharat, thank you so much for joining us this morning. Appreciate your time today.